What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today, on Wednesday, April 28th, Biden is going to be announcing a full detailed proposal to Congress for what he wants in terms of tax changes for the upcoming future. He's also going to be detailing his spending requests, his plan, his proposal for spending. It's all included together in what's going to be called the American Families Plan. That's right. Have the government take money out of your back pocket and hand a little bit of it back to you. Call it the American Families Plan. Sounds fantastic to me. So right now we're going to look at four main expected changes to the tax code, four things that might have the biggest impact on you. Cover the details to see if number one, you are going to get hit by these new tax changes if they go through. Number two, even if you're not getting hit directly by the tax changes, how will it affect the economy and the markets and so forth? And then finally, what can you do about it, if anything? Ready? Let's dive in. So like I said, I'm recording this on Wednesday, and so as I'm recording it tonight, Biden's going to be detailing the plan, and so I will post an update to this video after he actually announces his plan to Congress, and I'll let you know of any potential changes compared to what we're expecting right now. The big four that we're going to focus on right now is capital gains tax increases, the removal of stepped up cost basis, the removal of the 1031 exchange, which is potentially enormous, and then the SALT cap, the state and local taxes cap deduction issue. All right, so first thing is the capital gains tax hike. Right now, the proposal looks like it will be if you have $1 million or more in income or in capital gains in a given year, your capital gains are going to be treated as income, and that rate is going to go up to about almost 40%. So it's basically doubling what that current rate would be. Now, there's some problems with this. If that's the only thing that gets pushed through, it likely won't result in any additional revenue for the United States government. It'll kind of backfire. And the reason for that is because if you're going to get taxed an enormous amount to sell a large asset, you're just going to keep it. And instead of selling it, you are going to take out a loan against it and keep the asset as collateral, and then just use the collateralized loan as your income, which is tax-free. Debt is tax-free. And so that's going to be what's going to happen, which means that overall, across the board, asset sales are going to plummet. They're going to drop. And what we know from supply and demand is that when there's less sellers, less people willing to sell something, and constant demand, you're going to have drastic price increases in order to get to the point where you encourage the sellers to sell. And so if this is the only thing that happens, just an increase on capital gains taxes, what you're going to see is selling dry up. It's going to drive asset prices much higher, which is going to benefit the rich, and it's going to hurt the poor because it makes it even harder for the poor to get into investing into and to buy assets. Now, I said that this would probably not result in any additional income for the government if this is the only thing they do, and that's because people are just going to keep their assets and then borrow against their assets. But you might be thinking, hey, but what about when they die? Then, they're going to pay taxes on that when they die, right? The answer is no, unless the second change goes through. Right now, they're trying to float the idea of removing stepped up cost basis. So right now, let's say your mom and dad, they have a house they bought 40 years ago, spent $75,000 on it, and right now it's worth $575,000. It's got $500,000 worth of gains on it. Right now, if they sold it, they'd have to pay taxes on the whole $500,000. And so many people who are close to death are just keeping all of their assets. They don't sell them because they don't need to sell them. And then when they die, their heirs receive those assets as if they purchased them at their current value. So here's what I mean by that. Your mom and dad, they've got a house worth $575,000. They die, you get that house for $575,000. If you sell that house today for $575,000, it's as if the IRS is treating that as if you purchased it for $575,000 and then you sold it for $575,000. You've got no taxes on that because there's no gains on that. You bought something for $575,000, you sold it for $575,000. If that's called stepped up cost basis, and if this proposal makes it through, it means that there's no more step up in cost basis for when you receive an inheritance. Instead, the original cost basis carries over to the heirs. So when you receive that house for $575,000, the original purchase price sticks with it, and you still, when you sell that house, will owe $500,000 worth of taxes on those gains. Now, if both of these things go through, number one, you're not not going to have a significant amount of selling. It's not going to offset the number of people that are going to keep their assets and just borrow against them because they don't want to pay the gains right now. They're still going to pass those assets on to their kids, but it will result in an increase in revenue for the government, potentially up to like $130 billion right now is the estimate. Now, a couple problems with this that I see. Number one, I view the irresponsible rich trust kid as more trustworthy with redistribution of wealth than the government. Because if the government gets their hands on that money, it goes to line the pockets through corporate welfare, line the pockets of the oligarchs and the plutocrats that are running this country. It goes to bailouts, it goes to the military industrial complex, it goes to all of these horrible things that nobody actually wants their money going to. Whereas if the rich kid gets a trust fund and gets millions of dollars that he inherits tax-free, what's he going to do with that? He's going to blow it all. He's going to spend it. He's going to buy some Lamborghinis. He's going to buy a yacht. He's going to go out to fancy restaurants. And you might think, well, he doesn't deserve that. We should redistribute the wealth instead. He's doing that. He's redistributing the wealth and actually contributing it directly to jobs. The people who built the Lamborghinis, the people who built the yachts, the people who are serving him and waiting on him at the restaurants and at the clubs that he's going to. Pretty soon that money will be gone because he's irresponsible and he blew through his stash, and that money has been redistributed in a much more effective and democratic way than if it was to go through the government first. And if you're really concerned about leveling the playing field and stopping so much wealth from passing down from generation to generation, the answer is not to give the government more control and tax people and take more money from people. The answer is to stop taking money from people to subsidize rich people. What do I mean by that? Medicare. Medicare is simply paying for expensive healthcare for old people regardless of needs. And so you've got a rich old person and a poor old person. They both have access to free healthcare, and the taxpayers are paying for this. If you eliminate Medicare, you still have Medicaid. That means the rich old people have to pay for their healthcare themselves, and they wind down their savings, they deplete their nest eggs. And then if you get an old person that no longer can pay for healthcare, you still have Medicaid. And so the only thing that's happening here with Medicare is that taxpayers, poor people, are subsidizing the inheritances of rich kids using the government as a conduit to do so. And so if you're really concerned about leveling the playing field and not allowing so much wealth to pass on, the answer is not to tax more, the answer is to tax less and stop subsidizing it. Get the government out of it. That'll be far more effective and more fair. And I get it, everybody receiving Medicare has been paying into it their entire lives, but guess what? Nobody wants to be the one to take responsibility and pay the cost. Everybody wants the next generation to have to pay the cost. All the old people right now say, I want to get my fair share because I paid into this my whole entire life, and so I'm going to do it and just let the next generation handle the consequences. And guess what that's a recipe for? Currency collapse. All right, that's enough of that. The next one that we got to talk about is going to be the 1031 exchange removal or severe limitation. Right now, if you're not familiar with the 1031 exchange, it basically allows you to sell a property and an investment property and reinvest all that money into a new property, and you don't have to pay taxes on those gains as long as you're reinvesting that money into a new property. So if you bought a rental house for 200 grand, you're selling it today for 300 grand, and you just sell it, you're going to owe taxes on the 100 grand difference between what you paid and what you sold it for. But if you take all that money and you buy a new property with it, it just defers those taxes. It rolls those gains into the new property. Later on, when you sell that new property and then you just completely sell it, then you have to pay taxes on all the gains from all along the chain of every house that you rolled into that one. And yes, if you keep on doing this for the rest of your life, and every time you sell an investment property, you roll it into a new investment property, that defers your taxes all the way to the end of your life. And then if you die right now under current tax law, then your heirs receive those assets with a stepped up cost basis, and you can potentially pass on a large real estate portfolio to your heirs, and they don't have to pay taxes on it, and you never had to pay taxes on any of those gains along the way. Fantastic system. I love it. The current proposal is that the 1031 exchange is limited to $500,000. It looks like $500,000 per year of gains. Who is this going to apply to? Right off the bat, you're thinking, well, it's not going to apply to the landlord who has 2 or 3 or 4 properties that are each single family homes that they bought for, a couple $100,000 and right now are worth double what they were before, because each one of those properties probably only has $200,000 or $300,000 or $400,000 at most worth of gains. So if they sell one of them, roll that into a new property, they still get to take advantage of this tax roll. That's correct. Who has the most money in real estate though right now? It's not the small investors, it's the big money. The big money who owns the massive apartment complexes. The big money who owns the massive commercial real estate. Big money who owns the large institutional money in pensions, in endowments. Large money I'm talking about here. Guess what they don't own right now, mostly? Single family homes. Guess what they do own? Large properties. Guess how much they have in gains on those large properties? A hell of a lot more than $500,000 in 1 year. And if they sell any of those properties, guess what they now have to pay? Taxes on all of those large property gains. So when making new decisions about where to allocate their resources and their money, where do you think that money is going to go now? It's not going to go into the big commercial real estate. There's no tax benefits to do that. You're gonna get screwed. So all that money is going to be poured into single family homes, further bidding up the prices of single family homes and making it even more unaffordable. You're just pushing a massive amount of institutional money into small, regular single family homes in order to take advantage of the tax incentives that only apply now to those homes that are already in short supply. So this would be a bad move. And then the last thing that they have to deal with is the SALT cap deduction. The SALT cap deduction, SALT, state and local taxes. Right now, if you live in a place where you pay a lot in state and local taxes, you can only deduct up to $10,000 of that from your federal income tax bill. This is something Democrats in particular are very upset about right now because it mostly applies to people in the largely blue states, especially like New York and California, and especially to the high income earners. And so many Democrats are saying, hey, if any of this other punitive tax stuff gets pushed through, we definitely want the SALT cap removed or at least adjusted upwards. Otherwise, we're not going to vote for this because the oligarchs and the plutocrats are all about lining their own pockets and preserving their own power and their own wealth. And so if they're going to punish everybody else, they at least don't want to get caught up in the midst of it. They want to be able to line their pockets along the way. And so I see this SALT cap deduction issue being a big issue for getting all of these proposals pushed through in their exact form right now. And I would highly expect that if any of these things go through, the numbers of them change. And so capital gains taxes will probably not increase all the way to about 40%. They'll probably increase, but probably not that high. If I was a gambling man, I would probably put money on the fact that a step up in cost basis will not be removed. A 1031 exchange removal or limitation to 500,000 probably won't be 500,000. If they do something like this, it'd probably be more like a couple million. And I do expect the SALT cap deduction will be increased from $10,000 to something more palatable to get more of Congress to sign off on this. And then lastly, if you want to learn all of the secrets and the tax loopholes of the rich, there are things that everybody can do. There are rules that are available to everybody. You just have to design your life in a way to take advantage of what the United States government says. Do this and we'll give you tax incentives because the politicians say this is good for our country. So be patriotic, design your life in a way that you'll pay as little in taxes as possible, and do that by reading this book. I love this book, Tax-Free Wealth by Tom Wheelwright. I've got it linked in the description below. As always, I really appreciate you guys. Thanks so much for watching. Have a good day.